What's going on, everyone? In this video, I want to give you guys my exact scalping strategy that has gotten me funded with Apex Trader Funding prop firm. So what I want to cover here might resonate with you. It might not. Some of you guys might think that it's just plain out too simple, that there needs to be some intricate, explanation behind it. And others will, quite frankly, love the strategy. And I know a lot of people inside of my room at Evolution Traders, they really, really love the strategy because of the simplicity behind it, because there's a clear set of rules. And obviously, when you put on a trade, there's only two potential outcomes. You're going to win or you're going to lose, right? The moment you start to accept that you have no control over the potential outcome of any one given trade, and you have an easy script to follow where every day you can come into the markets. I don't care what session you want to trade, for how long you want to trade, doesn't really matter. You can block out a 30-minute period and you can tell yourself, if my setup presents itself, I'm going to take the trade. And if the trade wins, I'm going to walk away. If the trade loses, I'm going to walk away. You can trade for an hour, 2 hours, and you can tell yourself, I will continue to take 2 to 3 trades given the setup presents itself, and then walk away. What most people try to do, in the hard part about strategies in general, is, especially when you're trading the NASDAQ futures or any futures market for that matter, there's multiple sessions throughout the day. Markets are open essentially 23 hours a day, so you can trade Asian session, London session, roll it into New York session. You can do all sorts of things, right? What I'm a big advocate of is picking the session that resonates with your time schedule, right? So if you work overnight, I don't realistically think that you should be trading the New York Open, right? Maybe you want to trade the New York PM session where you're coming back after lunch. If you work, let's say 4 in the morning, right? And you're not going to be there for the New York Open, then maybe trading the London session or the Asian session might be for you. But let's get into the exact strategy. Now, the reason why I love this strategy is because, like I said earlier, it's very, very simple. We're essentially looking for one thing to happen in the markets. So on my charts, you're going to see a bunch of lines. You're going to see some channels. You're going to see some price action. All I want you guys to focus on here is this white line. Okay, that's it. This white line. That's the 20 period moving average, the 20 SMA, simple moving average, the 20 simple moving average. We're also going to focus on a 5-minute time frame. We're also going to focus on the mindset of scalping. Okay, I want to get in, I want to get green, I want to get out. We're also going to focus on not taking a million trades a day. Okay, I don't want to take a million trades a day. I want to make just a tiny portion and I want to walk away. Now, to the naysayers and the haters and the people who want to make this super difficult, they're going to look at this chart and they're going to say, oh, well, the best opportunity was to buy here on the trap and just hold it all day, right? That's easier said than done. Okay, when you get into the live markets and you're watching price action and it's shooting down, it's shooting back up, it's coming, it's doing this nonsense, you're kind of holding it into this daily 5, it pulls back, you get scared, you panic, you break even, right? You start chasing it back up here, now it's consolidating, it's driving you nuts, and then you just cut the trade and then it starts to spike again. Very, very hard to kind of hold these all day trends, right? I found it very hard to do that. Maybe you find it a little bit easier, and if you do, then maybe this strategy is not going to be for you. But the strategy that I'm using, where I'm incorporating this 20 SMA, I'm looking for those quick shifts in momentum, and I'm looking, honestly, I can only speak for myself, and when it comes to passing evaluations, sure, we can put on a bunch of size, and we can get to that where we're trading multiple mini contracts to pass these evaluations very quickly, but when it comes down to what's works best for me, it's taking maybe 2 to 4 trades a day, and it's taken between 5 and 10 points. Take profit. Now, some of you guys may be thinking, well, 5 points take profit. What if you take a loss and the loser's 20 points? It's going to take you so much longer to get it back. I agree. But when you look at it in a sense of, if each Apex account at an 80% discount, which they're offering right now, you can use code DAnthony. If every account is $33 for a 50K account, essentially you have that $2,500 buffer, that $2,500 drawdown, and you can use that as a $33 trade. Okay. Now, I don't know where you come from or where you've gotten your start at, but it's definitely a lower cost, a lower barrier to entry trading prop firms. I personally have come from trading equities and trading options where I realistically can't even get into a trade and risk less than $33. You know, a lot of the times I'm trading Tesla or Nvidia, I'm trading between, 5 and 15 options contracts. I would love to lose $33 a trade, right? I would love to lose $33 a trade. So when you start to look at it from that mindset, it starts to make a lot more sense. You've got a lot more cushion to play with. Yeah, sure, maybe taking a $300 loss or a $200 loss one day when you're only targeting $50 to $100 on the winning side seems like a big negative conflict of interest. But when you're operating a strategy like this, that pretty much, okay, and I don't want to put no guarantees because, knock on wood, there's never a guarantee in trading, okay? Let's just get that out of the window. There's never a guarantee in trading. You're always going to lose trades. You're always going to go into pitfalls. You're always going to have things bad happen to you. It is what it is. You're just going to have to live with it, suck it up, and understand that it's part of the game. But when you're operating a scalping strategy like this, where we are looking for those shifts in momentum, and when I mean shift in momentum, I mean that when price action loses a 20 SMA and then reclaims it. When I'm looking at that, I'm looking at those type of movements, I'm looking for 5 to 10 points. And a lot of the times it's right in the middle of that, just depending on how fast the price action is moving. If the price action is moving extremely quickly and it's just jumping up in price, I will hold it for a little bit longer and sometimes able to get 10, 15, 20 points. A lot of times I'll get into these trades and it's kind of dancing around and flirting with that entry, and then it starts to pop 5, 6, 7, 8 points, and I like to scale out very quickly on that. So if we look at this price action from today's open, and today is July the 14th. If we look at this price action, we had an immediate spike off the open that got rejected at the daily 5 SMA. Price action started to pull back down below the 20 SMA. It also lost VWAP and it closed. There's a big 84-point candle here, okay? So a lot of pressure to the downside. Well, if you have that scalper's mentality turned on, and you have that mentality of, I'm just looking to pass evaluations quickly, I want to get in and out, I want to let the days pass, I want to compound my account, I want to take a week, 2 weeks, 3 weeks to pass these accounts, and I just want to take the trades that are presenting themselves that I know where to get in at, okay? In this particular case, the low of this big candle here was 22,853. That's step one, allowing the price action to close below the 20 SMA. Step two is going to be entry. You want a following candle to confirm that low. Now, whether you want to have a stop sell order there or you want to market order in, the choice is yours. I tend to market order in a little bit of the time. Sometimes I'm in a little early, sometimes I'm in a little late, but I like to market in and out just because I feel like I have more control over where I'm clicking the button. When you get into this trade, 22,853 is the entry price. This trade shoots down to 22,842. Okay, so it goes down 10 to 11 points extremely quickly. And if I'm looking between 5 and 10 points, well, then all I'm doing is getting into this trade. And as soon as I start to see it's moving in my favor, 5 points, 6 points, 7 points, I'm exiting the trade. Very simple, right? How do I know that I'm going to be able to get 5, 6, 7, 8 points before it does this complete reversal? I don't. You never are going to know if the trade you're in is going to work. Now, that's going to shy people off of a lot of strategies because the truth be told, many people want exact answers. And I'm here to tell you, with 13 years of experience trading equities, trading futures, you're not going to get an exact answer. Trading is not necessarily, in terms of outcome, black or white. There's a big gray area. Now, the black and white in trading is and should be based on your risk management. How much are you willing to lose? How many contracts are you willing to trade? How many trades are you willing to take in a day? What time of day are you willing to trade? That should be black and white, okay? The outcome is a big gray area. So the reason why I have settled between 5 and 10 points and anything in between is because over time, over the years, and again, I've been trading futures pretty actively for the past 3 years, I've noticed that I have a very high win rate snagging between 5 and 10 points. And that win rate can be at times 80, 90% on the day, 100% on the day. Over the course of 40, 50, 60, 70, 80 trades, it can be closer to 70 to 75% of the time. So if that's the case, and you understand that as long as you practice good risk management, and as long as you practice not being an absolute animal and trying to trade a million times a day, a million different sessions a day, and you're content with your small wins, and you allow those $100 days, those $200 days to stack up, you'll start to realize that things start to fall in your favor a lot more. Okay, it's when you start to oversize too quickly and start to take too many trades on the day and think that you have a great understanding where 5 to 10 points has been working, but there's been a few instances where you watch the trade reverse and go 50 points in your favor, and now you're trying to squeeze out 30, 40 points out of a trade and give it all back, right? Don't do that. If something works, don't change it. Right? So in this particular scenario, it goes down 11 points. You would have been able to snag 5 to 10 points on this move. You're going to see that it quickly reverses. And anyone looking for a big washout and a big flush absolutely got destroyed. So that's a mindset shift. The mindset shift is going to be, I'm not looking to hit the home run. And I know a lot of you guys have heard that analogy before, base hits over home runs. But as long as you shift that mindset from telling yourself, I don't want to try to hit big fancy home runs. I just want to get in. I want to essentially sneak in through the back door. I want to make a couple of points. I want to walk away. I want to take as minimal trades as possible. I want to trade as least amount of time as possible. And I want to just let days compound. You're going to have a much better approach. Immediately reverses. And again, just sticking to the strategy, just sticking to the rules. We close back over our 20 SMA. The high price here is 22,924. You're going to get in, whether that's a stop buy or a market order, and you're going to get in over, let's call it 22,925. In a matter of 5 minutes, this shoots up to 935, another 10 points. Immediately pulls back, and this pullback is going to get a lot of people concerned, a lot of people who are looking for those big extravagant moves. Now, here's where things can get a little sticky. If you treat it as a scalp where you're getting in, you're taking anything over 5 points, you're in and out scot-free, right? Like you're riding off into the wind with 10 or 12 or 13 potential points on the day and you're happy, or you're looking for more, right? Now, over time, as the days start to add up, you can definitely start to increase your contract size. So for example, of course, if you're trading one micro contract and you snag, let's say 10, 15 points on the day, sure, you're only up $20 to $30 on the day. I understand that. But if you're trading 2 contracts, you're up closer to 50 to 60 bucks. If you're trading 3 contracts, you're up closer to, 60, 70, $80, right? Depending on if you're taking 5 points or 10 points or so forth. We can just do the math and say you're taking 5 points, right? So for every 5 points that you're making $10 per 1 micro. So if you trade 2, it's 20, 3, it's 30, 4, it's 40, 5, it's 50. So I like trading in that sweet spot of 4 to 5 micros, taking between 5 and 10 points. So every trade for me is not going to be a tremendous amount of money, right? Some trades it's going to be, $20. Some trades it's going to be 30, 40 bucks. But if you find 2 or 3 setups throughout the day and you're able to make that 5 points here, 5 points there, 5 points here, you make 15 points all in all total on the day. That's $30 per 1 micro, $60 per 2 micros, $90 per 3 micros, $120 per 4 micros, so forth and so forth. You get my drift. So if you're trading between 4 and 5 micros, snagging between 5 and 10 points, essentially 2 to 3 winning trades on the day can net you between $100, $150, $200 on the day. Okay. Now, when you start to look at that scenario, using just that strategy, that one particular strategy, you can now start to compound days towards that $3,000 threshold to pass your evaluation, towards those 8 trading minimum days of over $50 and trying to hit that target of $2,600 to get paid with Apex Trader Funding. You're going to stay inside of the risk management rules. You're going to stay inside of the 30% rule. You're going to stay inside of all these rules. Now, the last question that we should address, what about stop losses? How much are we risking? On this potential trade here, it's 84 points. If I'm looking for 5 points, I'm not going to risk 80 points, am I? No. So what I believe that we should do is have a hard dollar amount. Since we are looking at scalps and we are looking at 5 to 10 points on the take profit side, I believe you need to kind of set up your stop loss in terms with something that's going to make sense to not only keep you in that consistency rule, keep you in that 30% rule, but something that's not going to completely blow your account. So I would start off trading 2 to 3 micros, and I would give myself $100 to $120 stop loss, right? And I would look for, $40 to $50 on the take profit side. So essentially we're kind of risking 1.5, 2 to make 1. And that's okay with me because I know for every 2 trades that I take, I'm going to get back to flat and start going back into the positive. It's going to keep your equity curve nice and smooth. You're not going to have any big spikes to the north side, and you're not going to have any big drops to the downside. Okay, it's going to keep things kind of in line with consistency. And when you start to think about trading, the biggest thing that you want to do is enforce that consistency. So if you're risking $100 a trade, well, essentially you're probably going to be risking between 15 and 20 points per trade. So if you're someone who likes to look at your risk in terms of points, I would say keeping your stop loss between 15 and 20 points is sufficient enough. If you're someone like myself who likes to keep it in dollar amount because it's just much easier to do, I would say if you're looking for $40 to $50 per trade, I would definitely risk no more than $100 to $125, $130 a trade. This is going to give you enough wiggle room to allow the trade to work out. This is going to give you a high enough win rate percentage to where you're going to win a lot more trades than you're going to lose. And it's going to allow you to win multiple days in a row and strive towards that consistency to start passing these targets. Again, if you guys want to start to learn a little bit more, and maybe you want to trade some of these strategies with myself and the Evolution Traders team, I am helping people or trying to help people with the knowledge that I have and the things that I'm doing, using micros, using very small risk, to pass evaluations and to get funded. Okay, now if you want to try this strategy out, you can use Apex, you can use whatever prop firm of your choice, but Apex right now is 80% off for all size accounts. You can use code DAnthony and get that savings. Now again, I will just outline the strategy very, very basic. What are you looking for? You are looking for short-term changes and shifts in momentum. You are going to use the 20 simple moving average as your indicator to tell you when momentum is shifting. You are going to wait for price action to close under the 20 SMA from previously trading over or vice versa. And then you are waiting, step 2, to confirm that closure below or above. And that's where you're taking your entry. Your stop losses is going to be, if you're looking for 5 to 10 points, is probably going to be somewhere in the sweet spot of 15 to 20, 22 points on the stop loss side, or on the dollar amount size for trading less than 4 micros. I would say we want to keep it between $100 and $130. We're kind of looking between, anywhere between $40 and $60 a winning trade. And we're looking to take a handful of trades a day to be able to just have enough consistency and log enough winning days so that at the end of a month's time, end of a 30-day rolling period, you're going to be well on your way to collecting that $3,000 so you can pass your evaluation. You're going to be well on your way to getting that $2,600 threshold with Apex, and definitely have more over 8 trading days so you guys can start to take those payouts, because ultimately that's what it's about. It's about trying to find enough consistency to get payouts so you can start to make consistent and monthly income from prop firms, because it's definitely highly beneficial to leverage these prop firms in order to take payouts. I will see all of you guys on the next video. Make sure to like, comment, and subscribe, guys. And again, all of my information and stuff is down in the description box below. I will see you guys in the next video.